So good morning, good afternoon, good evening, traders, wherever you are in the world. FX Trader here, and in today's video, I am actually going to be telling you guys why I won't be trading the EURUSD pair for the next coming days, coming months, or years, depending on what the EURUSD pair does in general. Now, I'm not just going to come here and tell you, oh, EURUSD is a bad pair to trade, or EURUSD is highly manipulated, or blah de blah, because the truth is none of those things matter. And if the market is in the right context, then you should be able to get good entries. And I'm going to be explaining step by step why I think my thoughts on this market is valid. Okay, good. Now I'm going to first of all shift away from a market like EURUSD, and we're going to be looking at a random pair, which is CHF JPY. Okay. Now, first of all, we are on the weekly time frame, so I do not personally trade the weekly time frame, and I'm not saying you should start trading the weekly time frame. I'm just going to make a little hypothesis here because we are all traders, and the work of a trader is to make hypotheses and prove that that hypothesis is actually true. Now, this is a very uptrending market. Now, I would like you to pay attention, especially if you're starting to doubt if trading works or you start to feel like you're actually hitting a roadblock in trading. This video should be able to help you guys, okay? Now, we have this market, and if you can look at this market just by looking at it, you probably think, oh, this market is going up. And if I ask you, where can this market be in the next 3 months or in the next 1 year? You'll probably be looking at a bullish incline like this, and you will not be wrong, because based on what the market had done in the past, even if you were down here expecting a pullback, it just kept breaking up. And even when the market kind of like moved down trying to break structure, what happened? The market kept going up and going up. Now let me go down to the daily time frame and show you what is happening in this market. Now, on the daily time frame, what can you see still? I can still zoom out so you can see. On the daily time frame, what's happening? Even though we are getting breakdown, look at all these zones, price started breaking down. Even though we are getting breaks down in the market, what do you see? When the market started going up, after the market broke down and started going up, which momentum was stronger? Was it the down break or the up breaks? I want you to type it down in the chat. Correct, the up break. When the market started breaking up, you can see the momentum the market was using to go and how good this market was going, right? Hypothesis number one, from the weekly to the daily. I personally trade a 15 minutes time frame, and I'm going to work it down to the 15 minutes time frame and show you exactly where you need to be taking trades. Now, I don't care what style you use in trading, whether you're using the SMA, the Bollinger Bands, the EMA, the Vortex indicator, or the super trend indicator, whatever indicator you use to trade, this will actually work when you apply them in the particular zones I am giving you to apply them. That will be very simple, and I'm going to keep explaining. Now I'm going to go down to the 1 hour time frame from the 1 day. You can go to 2 hours, 4 hours, etc. All I'm saying is we are talking about the same thing. Before I even go to the 1 hour, let's first of all go to the daily and find where we want to look at. Now, where we wouldn't be looking at is when price is breaking down. Guys, very simple. If price is breaking down, just from the weekly time frame, we know we are expecting bullishness. So if price is making breaks like this down, we don't want to be looking at price, because these are zones that don't have momentum and would most likely be giving you losses. Okay, if price is breaking down, what should we do? Stay out of the markets during those periods until when price reclaim the top side, right? Good. Now I'm just going to walk you through the last recent up break. When price broke this place, we would be looking at buy trades inside all of this action up here before price started breaking down this way, obviously. If I even go to the 2 hours, you see prices are breaking down this way. So this price action is not valid to be looked at. Right. Good. Now, moving down to the 1 hour time frame, you can see I'm not just telling you, oh, go on the 1 minute, take your EMA, take your SMA, blah, blah. Your EMA and your SMA would work in good context. It doesn't matter what strategy you use. I'm not even here to preach strategy. I'm just here to show you the context of the market. Good. Now, cool. Looking at these markets here, where do you think we'll be having good trades? All over here. Price was breaking up. Price kept breaking up. And until price broke down, we stopped looking at the markets, because we know what we are here for. We know the trends we are here to catch. We know the type of trends we want to catch. So inside all of these zones, even on the lower time frame, using any type of confirmation, you are most likely making money. This is why sometimes when you're testing, you make money in some parts and you lose money in the rest of the money in all of the parts. Now, can you compare this move here? Take a look at it. Can you compare this move here with this move here? Which is cleaner? This one here, very clean trade. What's happening during these zones? Choppy price action, losses, and more losses, guys. And that is what will happen during times when the market is breaking down. And then you have to wait once more. When the market is clear, you can get entries. Now, I'm just going to walk you down even up to the 15 minutes time frame just to show you exactly what will happen if you are taking good trades in good criteria. Okay, very good. Now, if I go down to the 15 minutes, I want to see what happened during these zones, because we want to be following price when it is breaking higher on the higher time frame, even the higher time frame, and then on your confirmation time frame or your lower time frame. Now, if I walk this down to the 15 minutes, I hope my 15 minutes gets back good, cool. Even though the 15 minutes, this indicator didn't get back to the 15 minutes, I'm going to show you one on MetaTrader that does. Now, in the 15 minutes time frame, what will you be waiting for? Up breaks when price is breaking up inside all of these zones. Where will you avoid? When price is breaking down, you do not trade during those times. When price is breaking up, you are taking trades. And why would this work phenomenally? Because you've already done the work prior by checking the higher time frames, checking the breaks on the higher time frames, and so on and so forth. Now, if you're wondering what indicator I'm using here, the name of this indicator is not even that important, but it is the MET-FX structure. The MET-FX structure, you can just click on your indicators tab. Mine is just laggy. Then you're just going to type MET structure. Yes, MET-FX structure by MET-FX 50. It's for free, totally free. You don't have to pay anything. And you can use this indicator to do inter-time frame analysis. Now, this is a good market to trade, and I've explained zones and times where it would have been good for you to take trades, so on and so forth. Now, I want to take you to another time frame, another market, which is the EURUSD, and I'm going to tell you exactly why I'm staying out of trading EURUSD and why I don't want to touch this pair for now until the market is showing in a more clearer range. Now, if I go to the weekly time frame on EURUSD and I zoom in, you will see what happened previously. The market broke to the upside, right? Good. We wanted to be seeing more bullishness, to take more trades to the upside, because the market had clearly been doing that for a long period of time, breaking highs, breaking highs, breaking highs, breaking highs, breaking highs, which was a good time for if you were getting entries, especially if you're trading 15 minutes or higher. Now, what happened next was this market broke down this way and broke down again. At this point, the market was suggesting what? Bearishness. The market was suggesting bearishness, but even though it's against what has been happening for the longer period of time, because we want to see something that happened over a long period of time. Like, for example, look at this bearish move here. It broke once, it broke twice, and it continued breaking down, right? And this is when you know you are in the right trend and you can ride this trend until the trend no longer works. And this is why context is very important. Even as this is a trend, you still have to look for bearish zones inside lower time frames before taking trades. Bearish zones inside lower time frames before taking trades. And it doesn't matter what you use to confirm. If you're a breakout trader, you're an SMA trader, a Vortex trader, an SSL trader, whatever type of trader you are, it didn't really matter. Now, for this EURUSD, what I don't like is this market broke down. What happened next? Started making bullish moves. Down, up, down, up, down, up. Is it breaking continuously and going lower? No. Is it bullish right now? No. So what am I doing inside all of this messy range? And this can continue for hopefully the next couple months. And if you're actually trading EURUSD and you're successful on this, I mean, you must. It's not impossible. I'm not saying it's impossible, but I'm just saying, why not take something that is actually easy? Must you go through the hard routes? Must you take all the losses and bleed through the whole of your account before you stop trading this pair? Because this pair basically doesn't have direction. It doesn't have way, except maybe if you are trading on the 1 minute time frame, you might get good moves here and there. But if you're a beginner, even if you're an advanced trader, you need to know these concepts and know exactly when you should be trading a particular market and make money out of it. Now, moving away from EURUSD, I'm just going to show you different pairs where you can just go and apply what I've taught you today. One of them is Bitcoin. Bitcoin is heavily breaking to the top side right now. Heavily breaking to the top side. This is on the weekly time frame. It broke up. It started breaking down. And what do you think we're going to do during this period when it's breaking down and the trend is overall bullish? We're just going to ignore the markets during all these zones. When I go to the daily time frame on Bitcoin, what can you see on Bitcoin? The daily, And see, the daily has been bullish, even though this price action has always been bearish here. Daily has been bullish. Now go on the 2-hour time frame. What are you seeing? That overall bearishness is now starting to turn into bullishness on the 2-hour time frame. And these are the periods where you can step down on the 15 minutes time frame and start taking good trades in good context using any method you deem fit. Okay, guys. Another market I'm going to show you guys, because I'm just with this channel, we like to be practical, and I like to give you exact tips on how to go about doing things, because we don't just want to tell you, oh, you can get it, blah blah blah. Take a look at US30 on the weekly time frame. What is this overall doing? Bullishness overall. Daily time frame. What is it doing? Bullishness overall. What should you be looking for? Bullishness. What should you do when price starts breaking down, like this zone here? You stay out of the market until it starts showing you bullish breaks. Now, even after this bullish break, what happens to price? Even though it was showing you bullish break, start making multiple bearish breaks to the downside, which means you stay out of all of this price action, because these are times when you'll be heavily losing money. You don't know what to actually do, because the markets are just unpredictable, blah de blah. And that is because you're trying to be a superhero. Now, recently, on the daily time frame, what happened? US30 just broke out. Now, where do you see this market going in the next 5-6 months? Most likely, it will be going to the top side in the next 5-6 months, 1 year time. And you know that these are periods when you actually will be making money when you are trading the markets. Now, these are just practical examples. You can go from now on the lower time frame. Please be looking for bullish. This is not financial advice, obviously. Look for bullish breaks on lower time frames, such as a 1 hour. You can see, look for bullish breaks. Now that your market is going down, what will you do? Stay out of it until you get another bullish break, and then you start following it, even down to the 15 minutes time frame. You start following the market, and these are zones where you can make money trading. Not financial advice, obviously. Another market we should be looking at is not even on my watch list, but you know, XAUUSD. XAUUSD is a very, very good pair you should actually be looking at. And on the weekly time frame, what is it doing? Breaking to the, sorry guys, these are analysis I've done years ago. I don't really use TradingView that much. On the weekly time frame, what is XAUUSD doing? Breaking to the top side. There are periods when you shouldn't have touched XAUUSD. For example, look at this period when it broke high. But what happened throughout those zones? Down, move, up, just like EURUSD basically. So you can see, even breaking down all these zones, you shouldn't have been watching this pair at all, because it wasn't making sense. Now, when it started breaking up, what again should you have been doing? You know the overall trend, and then you start following on lower time frame context that matter. You start breaking down, leave it alone. Once it starts breaking bullish again, you start looking for, on the lower time frame, basic confirmations, going to even the daily time frame. You know exactly what you should be looking for based on what I've shown you. And this is the only way to get context. Now, let me explain what context is. Normally, to kill a human is illegal. But there's a context that you can kill a human and you can get away with it. Maybe you killed somebody based on defense. Maybe you killed somebody based on defense. These are actually periods when the police can be like, oh, you did it out of defense. And then you'll be pardoned, you'll be let go as a free citizen of the country, even though it's against the law to kill a human. Now, you should look for context where it is right to trade, even though it is right to buy on your EMA, your MACD, your breakout, the blah, the blue, which is, I agree with you guys, the RSI, blah, the blah, whatever you're using. But use them during context that makes sense in trending markets, because trading is the only way to actually make money trading. And this is what the greats of the trading, the greatest traders have actually leaned towards, because these are actually the only way to make money in the market, if that makes sense. Now, I'm going to go to EURUSD and tell you what will happen before I start looking at EURUSD once more. Now, I'll go back to the weekly time frame, because that's where I want to look. Now, it's either EURUSD breaks this top range right here, breaks it and sustains, then we look for a bullish push. Or it breaks this low here and start putting in lows and sustains, then we look for what? A bearish push, which is confirming a trend, which we are looking at. Wow, right? A trend, because trends are sustained by higher time frames. Higher time frames are the templates for looking for what? The trends to start looking for on lower time frames, because lower time frames are just messy if you don't look at the bigger picture. You always have to look at the bigger picture before taking your trades, right? And this is what it's going to look like when you put everything I've taught you together. This is the higher time frame. This yellow orange line is higher time frame. And all of these are structures based on minimal time frames, smaller time frames. And if you look at this enough, you would look for those zones where it's actually breaking to the top side, where it's breaking to the top side, and these are periods where you should be taking trades. I don't know what I've said has made sense to you. I like traders who actually do research instead of just typing in the comments, oh, lovely video, oh, great video, blah, 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 blue. You actually have to go ahead and do the work, because even if I talk for the next 1 hour, 2 hours, explaining the same concept, and you don't put in the work to try to understand what I'm saying, yeah, most likely among the 95% of traders losing money in the market. And I hope this video actually gave you a better chance at entering the 5% of people that are actually smashing this market and making money. So with this small video of mine, hope you guys are good. Hope you guys enjoy this video and keep making money, guys. Stay blessed.